Welcome to AHA Math and Science. In today's video, we'll be discussing the direction of several major indices, including QQQ, SPY, IWM, and also the volatility indicator VIX. I guess recently in the QQQ had some fierce rally, and in fact, from a close of 260 on December 28 to a close of 320.93 just a couple of days ago on March 31st, it actually rallied more than 23%. That's kind of put the QQQ in kind of a so-called official bull market. And in fact, it also kind of break the downward trend kind of started on January of 2022 when the bear market started. So does this mean like everything is all clear? We're gonna be heading higher from here, and the bear market is kind of behind us. Well, that's kind of the questions that we want to actually try to answer and see if we can find the information from previous instances. So this is a very sort of very quick rally, a very fierce rally in this overall bear market. In fact, such a fierce rally in a bear market is quite common. Actually, it happened a lot, and we can take a look at another case that happened during the 2008 and 2009 bear market. So the market topped in October 2007. And you can see that the QQQ, which tracks the Nasdaq 100 index, closed at 41.26 on March 10. That's the low it reached. And then it actually increased again more than 20%. It's like around 23%, very similar to what we are seeing today. Closed at 50.55 on June 5, which is another like almost like 3 months, just kind of like what we have for the recent rally for QQQ, starting from like end of December to like end of March. So 3 months rally, and also more than 20%, and put the QQ also in official bull market, and it also break this downward trend seems. But we all know what happened later. A few months later, really fierce downward trend kind of started. So a bear market rally is very common. So, and it sometimes can be fierce. In fact, this case, it's even more strong because you can see that it basically can recoup more than 50%. It's actually like 2/3 of the loss it had from the top, from October high to the March low. So it recouped, 2/3 of the points lost it. So that's even stronger than what we have today for the bear market rally. So what does this tell us? Well, if you just kind of look at the QQQ, it's hard to see what's really going on. But when we actually compare QQQ versus other major index, such as SPY, which tracks the S&P 500 index, and then IWM, which is ETF, tracks the Russell 2000 index, and also consider the VIX, the volatility indicator, we get some information about what's really going on. So here you can clearly see the QQQ is already kind of break the previous high reached on the early February, and the SPY is relatively strong. It hasn't broken the high in early February yet, but it's relatively strong. But the IWM, the ETF tracks the Russell 2000, the 2000 small cap companies are very weak, and it's kind of just making lower highs. In fact, it already lost 15% since the early February high. And the VIX at the same time is actually trending upward. You can see that it's just making these higher lows. So QQQ says everything is good, but the other index, especially IWM, the small cap index, and then the VIX says not quite. So we need to actually look at like when divergence like this occurs, what really the market is telling us, right? So we want to look at a few instances that happened in the really kind of the last decade and see what kind of information insights we can get. Actually, the very recent one just kind of happened at the beginning of this bear market at the end of 2021 and early 2022. You can see here, right from here, November 2021 to kind of early 2022. While the SPY, which is this green curve, is making new highs, but at the same time, this lag curve, which is IWM, is actually tracking the small caps, is actually making lower highs. It's trending downward, while the SPY is making new highs. And the QQ is also relatively strong. It kind of stays at the top. And at the same time, as SPY is making new highs, the VIX indicator says there's something we need to be worried about because it's actually still trending upward. It's just making these higher lows. So that's a worrisome signal. So SPY, it says okay, but the small cap indicator is actually making kind of downtrend, and then the VIX is also kind of marching higher. So divergence, and then you all know that what happened later on. This is really the marked the top of this bear market, and it just has been kind of in this downward trend. And then again in 2018, something like this happened again. Here you can see that from September 2018 to October 2018, the QQ is relatively strong, and actually the SPY, which is this green curve, tracks the SP 500, is actually making new highs. But the other WM, which is the ETF for the small cap, the small caps is actually making lower highs, or it's just kind of trending downward. And at the same time, even though the SPY is still making new highs, and the VIX doesn't really says like everything is clear because it's trending upward. It's just making these high lows. And we all know what happened when this kind of divergence occurred. Eventually, that a few months later, the small caps actually enter a bear market. So is QQQ. QQ was also briefly in a bear market, and the SPY just barely kind of skipped the bear market. And then another scenario happened in 2015, very similar. You can see here, almost like for half of a year, like July 2015 to like December 2015, the green curve, the blue curve is a QQQ, which is kind of making new highs here to here. QQ is still marching high, and the SPY is staying relatively strong, but the IWM, which tracking the small caps, is really kind of trending downward. It's making lower highs, and at the same time, the VIX says it's caution is needed. You can see that VIX it's kind of trending upward, and we look at what is the, you can see that it's just making higher lows. So that's trending upward. So again, you can see that a few months later, IWM was kind of in a bear market, and both QQQ and SPY cracked it and made their new lows lower than actually the previous low. So again, whenever you see that some of the index, especially QQQ or SPY, is making new highs, but the small caps are very sensitive to economy, interest rates, actually trending downward, and then at the same time, the VIX says caution is needed, which is kind of making high lows. And then you always see something bad is going to happen. So what about the current scenario? As we just discussed, our QQQ is kind of making new highs, and the SPY is still strong, but the IWM is showing a lot of weakness. It's already kind of dropped 15% from the early February high to kind of like the late March, low. So it's a divergence here, and then look at the VIX signal. You can see it's still trending upward. It's just making these high lows. So it's very similar to the scenarios we see at the beginning of the bear market in 2022, in 2018, in 2015. all these scenarios, you see the divergence between the major index and also the VIX signal is kind of signaling something is not quite right. Now, so this really kind of tells that I think a caution is really kind of needed for the current bear market. But what could change actually our mind? Say that, oh, now everything is clear. In my opinion, that the RWM has to be actually basically close higher than the February 2023 high. So it has to be make a new high, higher than the February high. And then the VIX has to be make a lower low, so that confirm that, the direction of the index. So until that happens, I don't think that, we are in this all clear market. So here is another scenario that actually kind of tells you that, maybe that, and from a signal like this kind of appears, then we can start to be more comfortable. In this case, you can see that from March to May of 2017, the QQ is making new highs, which is really kind of very clear. But initially, the IWM is making kind of trending downward. But eventually, after a month or so, it started kind of trending upward. And indeed, like 2 months later, the IWM, which also kind of made a new high. And then, even though initially the VIX is trending upward, but eventually the VIX also trending downward, making a lower low, indicate now kind of the signals from the major index all confirm with each other, and the VIX also confirm the upward trend. And then that's going to be kind of all clear signal. And indeed, from that point on, the market just kind of moved high. But we are not in that kind of environment. You can see that this has not been confirmed. And also, in this case, the IWM only had a 5% correction, which is very different from our current scenario, where IWM had already kind of corrected 15%. And we are also in this environment, current environment, where the fundamentals are deteriorating a lot. So the banks are kind of tightening their lending standards. And the inflation is still kind of remains high. And the people are kind of betting on the Fed pivot could be disappointed. So we really think that caution is really needed at this point. That if we want to be kind of really go ahead, we have to see that the index confirm with each other, and then also the volatility indicator confirm the upward trend, and we are not there yet. So I hope you have enjoyed this video and find the information present here very interesting. Please do not forget to click the like button and also subscribe to our channel. Your support really means a lot. And thank you for watching.